Hi, everybody. My name is River, and I am a financial planner. Um, this is my third or fourth year teaching budgeting and finances for artists, for vision-driven artists. Um, I'm going to bring up my slides and just do a little about me, but since we have a small group today, I have a feeling we'll be able to make this more specific to what y'all are dealing with instead of just running through the slides that I had prepared. I always like to make my workshops as useful as possible for the people who are able to make it live, because I think people can get a lot more out of discussion with me and asking their specific questions and talking about their specific situations than just, reading slides. But I want to at least make sure everybody knows a bit about me. Oh, here's another person coming in through the waiting room. Great. So like I said, my name is River. My pronouns are they, them. I am a financial planner. I want to tell everybody a bit about my personal finance philosophy so that you know where I am coming from when I talk about things. I know that capitalism is actively harming us all the time and harms some people more than others, right? Like capitalism is a tool of white supremacy and patriarchy and ableism and all the other ones. I also see that there's a ton of shame around money. I think part of that is because the people in power want us to feel bad about it and not really face it. But it is really interesting. I talk to people who say that they feel shame around money because they don't have enough. And I talk to people who say that they have shame around money around having too much. Either way, I don't think it's useful. So I want to help talk about money and reduce some of that shame. And I also hear about the shame of feeling like I don't know things, of people say to me, like, I don't know how money works. I don't know how to be an adult with money. And like, again, that's a symptom of the systems that exist around us. Like those of us who were raised in the US weren't taught things in school like we should have been. And then those who immigrated here definitely weren't taught things when they arrived here about how US financial systems work. So when I talk about capitalism being harmful, but myself being a financial planner, part of the way that I reconcile that is that when I help people with financial planning, I am not coming from a profit motive or a hoard as much money as possible goal. I am coming from, what do you want from your life and how do we use money as a tool to make those things happen? So when I am working with my clients in their financial plans, I am not giving them advice that's how they're going to hoard the most money possible. I'm giving them advice for how to ensure safety and security as best we can for ourselves and our loved ones. And then also like joy and fun and the positive stuff that we want out of life also. Hopefully that makes sense. I do try to avoid rule of thumb numbers. I know the whole internet is going to tell you that you should have 6 months worth of expenses in your emergency savings fund and that 30% of your income should go towards rent. I find those rules of thumb to be not very useful, partially because the just like inequality in this country is so much. And there's the gender wealth gap, there's the racial wealth gap, ability wealth gap, but then there's also just straight up like rent in New York is different than rent in suburban New Jersey, is different than rent in rural Oklahoma. Like it's just a different cost of living. And as our world is more and more global and what we earn might be global, might be local, but then our expenses are local, like those rules of thumb I just think are not very useful. And then also, I just think each individual person has their own priorities and values that they want to use money as a tool to live into those values and goals. And so I don't want to tell people that they can only spend a certain amount on rent if having a comfortable home is more important to them than going out to eat or something like that. Like ultimately, what you do with your money is about your own priorities and goals. And the one thing that I want everybody to take from interacting with me is the recommendation that you be intentional with your money, because that allows you to be intentional with your life. I see way too many people just trying to avoid money and not think about it and not look at it. And that means that they're not having as much of an opportunity to use money to get what they want out of life, or to protect themselves and keep themselves safe and take care of their loved ones as well. So that's why I named my company Be Intentional Financial, because that is my #1 financial advice. Hi, folks who are just joining us. So glad you can make it. I was just talking a little bit about myself. My name's River. And then I can talk a little bit about what I have planned for today. I always like to check in about feelings around money, how you are feeling about money, because a lot of times it's tough to manage money or make changes to our habits around money if we don't first acknowledge how it makes us feel. I also like to acknowledge the context that we live within, which I just did briefly, but I'll say even a little more. I like to teach budgeting, especially for artists, especially when your income might vary month to month. And I like to teach about credit scores and how to play the credit score game. I think the credit score system is really messed up and harmful, but you need to know how to play the game. And then I like to talk about common work benefits that people with more salary type jobs might get that someone who is self-employed or freelance would have to replace some other way, or just know that you are missing out on it. And other considerations for self-employed folks. So whether you are currently self-employed or are considering self-employment or are just working on a side hustle on top of your job, this stuff should all be relevant for you. And at the end of every workshop that I do, I like for everyone to choose an action step, because I don't want you to just sit here and listen to me talk for an hour and a half and be like, cool, I have information now. I want you to actually do something with that, and sooner rather than later, so that you don't just forget and resume your normal habits of your everyday life. So be prepared to choose your action step. I've also seen that writing down what your action step is, even if it then like disappears into the Zoom ether, makes it much more likely that you're going to do it than if you don't write it down or say it to the small group that we have here. The other thing I wanted to say before I dive into the rest of these slides is that the workshops that I teach are much more useful when people talk to me, engage with me, tell me what is going on in your situation and what questions you need answers to, so that I can customize what I'm talking about to what is going on with you and what you're here to learn. I don't find it as useful for me to just like read my slides and then send you on your way, you know, like I don't know what's going on with you and what you need from me unless you tell me. And one of the benefits to having a small group like this is that I can hear your questions and talk to you. So the chat feature is what's most useful for me, but if that's not working for you, you can also unmute and talk to me. Some questions that people said when we were first logging on today is how much to set aside for taxes, how much to pay myself versus how much to set aside for other business expenses. And someone was talking about like having an Etsy shop and just considerations around that business model, I believe, but let me know if there were more specific questions there. Oh, one of the questions was budgeting for purchasing supplies to make the stuff that you then sell. Yeah, all typical artist business stuff. Oh, I'm seeing a message from Pearl. Pearl, can you hear me now? Or is this working now?
Yes, I have to try several times. I think the link you sent out is not working. So I struggle. I go into the tickets and finally find a place to get in. But I tried more than 3 times. So I don't know. Some people, lost out because of this. Thank you.
Got it. Got it. Thanks for letting me know about that. I'm sorry for the trouble. We are recording it, so it will be available to folks who miss it. And I give this workshop with vision-driven artists every year, so it will happen again as well. But thanks for letting me know about that issue. Okay, so I'm going to talk context a little bit and then feelings a little bit, and then I do want to, keep putting your questions in the chat like Jack just did, so that I can customize this for y'all. Thank you. Oh, and more people are joining us. That's great. Okay, so I'm going to run through this really quick. The financial systems in the US are not designed to be fair. They are designed for wealth to stay in the privileged groups, for the rich to get richer and the poor to get poorer. We also know that the companies around us want us to spend money without realizing that we're doing it. So this looks like paying for things with your phone and how easy it is to just like not even check how much money you're spending when you order the Uber or order Grubhub or whatever. Signing up for free trials for things and then not realizing that they continue to charge you every month after that. advertisers and marketers are also just really good at what they do. You know, those Instagram ads in the past 5 years have gotten really specific and targeted to getting me to part with my money specifically about what I want and what people close to me want. You know, the Instagram ads are really good at targeting what would be a good gift for my boyfriend these days. I also want to acknowledge that there just aren't very many places where we can be in community with other people without having to pay for something or feeling pressure to pay for something. This is, you know, maybe the pandemic has changed how we interact with other people a little bit, but I think a lot about how there was this just normalized thing in my family that like we buy Christmas presents for each other, and that's how we celebrate a holiday or celebrate time together or show love for each other, is that we have to buy stuff for each other. And I think about like the friends that I only see when we go out to brunch together or go out to happy hour together, like we spend money together is how we are in relationship with each other. And not that those things are inherently bad, but I just want to start pointing out the little ways in which we are being encouraged and even peer pressured to spend our money without realizing that that's what we're doing, or without being intentional about what is most important to us. I also want to acknowledge that most people in the United States are in a precarious financial situation, and definitely the last 2.5 years has made that very obvious, and maybe worse. And everything is getting more expensive. I mean, gas prices are ridiculous right now, but inflation is always happening, which means that the dollar can buy less, or alternatively, depending on how you look at it, means that just everything costs more. So I say all of this to acknowledge that budgeting and planning is not going to fix inequality in this country, right? It can't pull somebody out of poverty if they just like budgeted hard enough. That there are these things that are outside of our control as individuals. But within that context, there are things that we can do as individuals to be intentional with our money and to take care of ourselves and grow our businesses and do what we can to have the lives that we want to have. So we can't control everything, but we have to take action for ourselves because nobody's going to come save us in most cases. So having acknowledged all of that and gotten a little bit dark with y'all, I wanted to ask what feelings come up when you think about budgeting. And while you all answer that question in the chat, I'm also going to scroll up and see what other chats I missed. Anybody have feelings about budgeting? Got overwhelmed? Yep, that's common. Headache? Yep. What are the systems that I can rely on that actually help? Yeah, I don't even know where to start. Totally. Fear of the unknown, fear of the tax gods throwing me in jail, wanting to ignore it and hope it goes away. Yeah, I hear all of these a lot. And I am glad that you're not ignoring it, at least right in this particular moment, right? Like you are here to talk about money with me. You are here to learn about things and take an action step or two to do something more useful. I think it is very common to want to avoid it, to feel overwhelmed, to not know where to start, and therefore to not start. But like I said, there are a lot of things out of our control, but this one is within your control as an individual. You can do something about managing how much money comes in and how much goes out and what you do with it. So let's talk about it. And I am, like I said at the beginning, some of you missed it. Usually I am co-hosting this with someone from Vision Driven Artists. Jasmine was supposed to be here today, but unfortunately the Philadelphia potholes claimed her car today. So she's dealing with that instead of able to be here, which means I'm going to do my best to remember the questions that y'all put in the chat, but feel free to remind me if I don't answer something that you wanted me to. I am here to be useful to you all specifically. So make sure that I am useful to you, keep asking me. So I'm going to go through this part really quick. Why create a budget? I think that a budget helps you to take care of yourself both now and in the future as best you can. It helps you not lose money unnecessarily to things that we talked about. So could be fees, could be like credit card interest. that consumer culture that's encouraging, you know, the Instagram ads trying to get us to buy things, the peer pressure of I can only see my friends if I pay for happy hour or brunch or whatever in order to see them. A budget can also help you get clear about what your goals are and what it would take to achieve those goals. And maybe most importantly, your budget helps you to align your money with your priorities. So if your top priority is to not get into, you know, scary IRS collections situation, then your next highest priority is to have shelter and food and water. And your next highest priority is to be able to make more money. Then we can make sure that what you're using in your budget, how you're using the money you currently have, is reflecting what those priorities are, instead of letting somebody else's priorities kind of get in the way of what is most important to you. And as I keep saying, be intentional with your money means that you can be intentional with your life. So in very basic terms, the way to create a budget is to figure out your expenses, figure out your goals of how much you want to be saving, figure out your income, and then make sure that you're making more than you're spending, and therefore you're able to save for your goals. So I'm going to talk kind of like big picture philosophically a little bit, not so much the nitty gritty, how to do it on the day-to-day. A lot of things that a lot of time artists and self-employed people struggle with, my income is not consistent week to week or month to month. So how do I budget for that? How do I plan for that? And I would suggest that you start by planning out your expenses first. And that'll tell you how much money you need to be making in order to cover those expenses. So more like traditional budgeting advice out there says, if you get the same paycheck every 2 weeks, then you know how much money you make, and the budget is just a plan for how that money gets used. But when our income varies, depending on how many products or how many clients we have, how many products we sell, how many clients we have, then we can look at how much we need to be making, and then look at what actions do we need to take in order to sell that many products or bring on that many clients. Okay, comment in the chat. Most of my nonprofit expenses come from in-kind contribution, and we are volunteer based. I have a hard time doing a budget and put a monetary equivalent of the in-kind contribution value from payroll to rent utility. Yeah, Pearl, that's tricky. Yeah, I'm trying to think how I can be useful to you, because creating a nonprofit's budget is different than creating like a person or a for-profit business's budget, because you do have those in-kind donations and even like grants and stuff. Instead of just like selling stuff for profit, you are like asking for donations and grants and stuff like that. And so it is a different framework. Yeah. When we get towards the end, Pearl, remind me and I'll see what else I can come up with to help you. I know there's other resources out there as well that do more of the like nonprofit structure budget. This is the budgeting and finances for artists, but it is geared more towards freelancers and for-profit artists, not necessarily people who are running a whole nonprofit. Does that make sense?
Okay, thank you.
Yeah, absolutely. Okay, so when we think about making a budget, we think about varying income. If you figure out what your expenses are, and you can think about what are my like mandatory survival expenses, and then what are my more like thriving in life expenses. So if I know like my rent and cell phone bill and internet bill and food, you know, like the stuff that's gonna help me survive costs $2,000 a month, then I know I need to make at least $2,000 a month from selling my products or bringing on my clients in order to pay for just my survival stuff. And then, yeah, thanks, Pearl. Have a good night. If you know that the other expenses that I have that would make me feel more like I'm thriving instead of just surviving, so things like going out to eat and shopping and traveling, saving for the future, maybe that's another $1,000, $2,000 a month. So then your goal for your business, selling your art or selling your services, is to bring in at least 2,000 a month, but preferably 4,000 a month, to be able to get both that survival and the thriving expenses covered. Does this concepts make sense? Am I confusing anybody? Great. So you might ask, how do I even figure out what my expenses are? I suggest you go back and look at them. And let me make another distinction here. I would suggest separating your business and your personal money completely, having two totally separate bank accounts, one for business, one for personal, and using your business account for anything that gets paid to you for whatever things you sell for your business, and anything that you buy for the business. So Jack's question about like, I need to buy supplies in order to make art, in order to sell it on Etsy. You would start with your startup money in your business bank account. You would buy your supplies, you would make your stuff, you would sell it for more than what it cost you to make, right? And then you have more money in the bank accounts and you buy the next round. That's like philosophically the way. Obviously, we can get more into the day-to-day like details of how to do that, but that's the concept there. Then on the personal side, you have all of your bills and life expenses, your survival, rent and cell phone and whatever, and you're more thriving like travel, vacations, going out to eat stuff. So if you have your business and you have your personal, then you can create a separate budget for each of them. And the business expenses are going to be what supplies or software or whatever, like, do I need to be able to pay for in order to make money in this business, right? Like, do I need to pay for the Etsy storefront? Do I need to pay for those physical supplies? Do I need to pay for my website? Like stuff like that. And then you'll make your money and then you'll pay yourself from the business bank account to the personal bank account. And you'll use what you paid yourself to pay for your personal expenses. Hopefully that concept makes sense. I wish I had illustrated that for you all. So when you're figuring out what your expenses are, whether in the business or in personal, you can go back and look at what they were over the last month. I recommend grabbing 1 month worth of data. And if you've been to any of my workshops before, you know that I always recommend this. But look at everything that you spent money on in the month of April, maybe, for the business and for the personal. And if you have not had them separate, if all of your money is all together, then you can use this as an opportunity to start to list out which of these were business expenses and which of these were personal expenses. And then you can see that, okay, it cost the business $500 to exist in April, and it cost me $2,000 to exist in April. So now I have a sense of my minimum survival expenses and what is business and what is personal. And I know some of you are going to say, well, April was a weird month for this, that, and the other reason. I would suggest that there's no such thing as a normal month. Like there's always going to be weird stuff that comes up. There's always going to be a way that 1 month is different than the month before. But it starts you with some hard data, some actual numbers that you can work with instead of just your perception of what's happening. And it gives you a starting point. And then you know, like, okay, well, I know April was weird for this reason. So this number is likely to be higher and that number is likely to be lower. And now I can make a game plan for June and July. When you're going back and looking at where your money went, look at your debit card or checking account, look at your credit cards, Venmo, Cash App, PayPal. Try to figure out if you know where cash went, especially if you get paid in cash ever. It can be hard to keep track of cash if you're not keeping receipts, but make your best guess at that point. For me personally, I know that if money came out of the ATM next to the barber shop, then that cash went to my haircut. If money came out of the ATM at the gay bar, then that money went to tip drag performers. And so like, that's how I just figure out where the cash likely went once it came out of my account. But it can be trickier if you're paid in cash to keep track. So you might want to develop a system for that, or deposit the cash and then use the cards so that you have a record of where your money went. Also think about, once you look at 1 month of data, think about what else is missing from the list. Do you have any annual subscriptions that you forgot about, whether it's like the website for the business or your Amazon Prime account for personal, car insurance, stuff like that. And think about what other expenses could come up that I don't necessarily plan for, like poor Jasmine getting a flat tire from the potholes today, like probably going to have to pay the car insurance deductible to get that fixed, or maybe other maintenance fees. So in figuring out your expenses, I think you start with the data, and then you think about what else might be relevant and what else might be different from that month of data. And you get to decide how you want to categorize your expenses. Think about what data is useful for you to have about your own habits. You know, in your business, is it just lumping like, I have one category of services that I need for my business and one category of physical products I need for my business? Or do you want to categorize them in some other way? Do you pay other people ever? Do you have big one-time expenses like a camera and then smaller ongoing expenses like editing software? And on the personal side, certainly you can decide if you want to group going out to eat in all one category, or if you want to separate takeout because I'm tired versus going out with my friends as separate things, so that you can be aligning what you're planning to do with your money with what is the highest priority to you. I always have suggestions for how to spend less at this point because people often ask that question, but I'll run through this quick unless people have more questions. I know people had other bigger questions that I want to get to. So in order to spend less, first question is, are you paying for things that are not actually important to you? So this could be subscriptions you didn't realize you were paying for or that you're not really using. This could be the feeling of peer pressure that I have to spend money in order to spend time with my friends or family. You could try to negotiate lower bills or switch providers. I see this to be most useful for internet cable bills and cell phone bills. And then I keep asking, are your expenses aligned with your priorities and your values? Some things you can't control, but the rest you can to some extent. So just think that through and make the conscious, intentional decision for yourself. And keep it realistic, right? Like I don't say cut out all joy from your life for the next 6 months, because I don't think that's realistic. But maybe takeout twice a week isn't working for you to be able to put as much money into your art as you want to. So maybe takeout once a week is the realistic compromise in order to put more money towards the art. I don't know what your priorities are. At this point, I always like to ask, are you spending enough also? Because budgeting is not just about spending less. It's about making sure you're spending enough on the things that are important to you. So you can think about what is important and are those priorities reflected by the dollar amounts that you've allocated to each of them. Okay, I'm going to stop my slides for a minute because otherwise I'm going to get off track and not answer these other questions that I wanted to get to. So there was a question about, oh, thanks, Ashley. I'm glad that was eye-opening. Yeah. Question about setting aside money for legally forming an LLC versus sole proprietor, legal fees and stuff. So with the caveat that I am not an attorney and I am not a tax professional, so this advice is only from a financial planning standpoint, not from a legal or tax IRS standpoint. When we talk about what business structure you want to form and how to form it, it might be easier than you think it is. If I were to set up a lemonade stand on Springfield Avenue right now and just start selling lemonade, I would just be considered a sole proprietor, no paperwork needed. The United States loves the concept of business and free enterprise and whatever, so I don't need to file anything in order to start selling lemonade. However, if somebody drinks my lemonade and gets sick, they can sue me. And because I am a sole proprietor, they can sue me for everything that I own personally, because there's no differentiation between me as a business and me as a person. So that is the benefit of sole proprietor, is that there's no paperwork, no fees, you can just do it. And the risk is that you have the legal liability, that they can come for your personal money in addition to the business money. So an LLC stands for a limited liability company, and that is a form that you file with the state in which you are operating your business that separates the legal entity of the business from you as a person, so that there is a limited liability that you take on. So if I first set up an LLC and then I was selling lemonade and I got somebody sick and they sued me, they would be suing the LLC of my lemonade company, and they could come for all the money that the business had, but they couldn't come for me personally. And so that offers a distinction. Again, I am not an attorney. You can consult an attorney if you want to. In the state of Pennsylvania, where I believe most of us are, It costs, I think, $125 and 2 forms to file a single member LLC. That means I am just one person creating an LLC where I am the only owner of the company. I think even if you're doing it as a partner, like 2 people LLC, it's still the same. But you can just Google Pennsylvania form LLC. I'm pretty sure you can do it online since the pandemic. I think I mailed it in when I did it pre-pandemic. But it is just like a form at $125. When it comes to then managing your taxes as a business, if you are a sole proprietor or a single member LLC, it's treated the same way tax-wise. All this stuff gets confusing because there's like the legal side and there's the tax side. So stop me and ask me if you have questions about what I'm saying. I want to make sure it makes sense. When you are filing taxes as a single person business, whether you filed the LLC or you're just remaining a sole proprietor, you are still filing your taxes as an individual. You're just an individual who made your money from a business instead of from like a W-2 job. And this accounts for freelancers also. If you're a freelancer, you are essentially a sole proprietor unless you filed the LLC for your freelance business. I think sometimes people don't realize that when you are a freelancer, you are an entrepreneur. That's how this country treats it. It's the same thing as owning a business on purpose. You're just kind of owning a business, maybe without as much quite intention. I'm off track. So does that kind of make sense about the benefit of the LLC and that it is kind of easy to do? You don't necessarily need legal advice to do it, although absolutely seek legal advice if you want it. And then when you're filing your taxes, if you are a single person business, you're filing your taxes still as an individual. Okay. Please let me know if I make anything confusing. When it comes to how much to set aside for taxes, that is the tricky game that everybody wants to figure out. I am eternally mad that the United States operates this way, where we have to calculate how much we owe in taxes when the IRS already knows how much we owe. Why don't they just tell us? And the answer is that Intuit and the other big names lobby them so that they can charge us to file our taxes for us. Yeah, it's horrible. This country's really set up terribly. I'll get off my soapbox. So for what you can do, I mean, also, Jack, like your risk of going to prison is probably not as high as you're worried it is. Like, I don't know how much you're joking, but like sometimes people do get really, really scared of the IRS. And like, as long as you're not fully running away from them for years, like it'll probably be okay. Really what they want to see is that you are making a good faith effort to pay your tax obligation, you know? So it's only when you're really avoiding them, like, yeah, no, absolutely, Jack, that's great. It's when you're really avoiding the IRS for a while that it gets you into trouble. And this is like always my thing about money is like be intentional with it, right? Like face it, do something about it, take an action step. But to come back to Ashley's question about how much should I be setting aside for taxes? A rough rule of thumb to get you started, if you are especially like in your first year of business or first year full-time at the business or whatever, is take your expected profit, which means the business revenue minus expenses, right? So if you have your business budget separate from your personal budget and you're like, I want to sell 10 paintings this year and they are $300 each, then I'm going to make $3,000. But it cost me, I don't know numbers, $200 total for the supplies to earn that $3,000. Then the profit is $2,800 because it's the 3,000 I made minus the 200 I spent. If I just said all that correctly, hopefully you get the idea. So you take the profit, the amount that you are keeping after you paid for your expenses, and 30% of that is what you set aside for taxes. Hopefully that is high. It should be high, especially if you are not making 6 figures or more in the business. So if that's too high to fit in the budget, you could start with 20% and then work your way from there. It is kind of a game because there are the tax brackets and then what things are deductible or not. And are you going to deduct part of your rent if you're making your art at home, and like all the things that accountants and tax preparers figure out. But from just a planning for the year perspective, if you want to be really on the safe side, I would set aside 30% of the profit. And if you feel like you're not going to make very much, then I would set aside 20% of the profit. hopefully that gives you I know I said at the beginning, I don't like rules of thumb, but this is one that's like, it is a useful tool if you're just getting started. Let me know if anything about that was confusing. I'm going to see what other questions I missed. Oh, I'm glad, Jack. That's great. Okay. Unless folks have more questions about that kind of like tax and business structure stuff I just talked about, I want to come back to the other questions about how to navigate never feeling like I have enough, how to figure out if I'm actually not budgeting enough, or if it's bigger feelings about scarcity and feeling overwhelmed by the thought of budgeting. Where do I even begin? I mean, really, both of those questions I just said are about figuring out how much your life costs in like hard numbers instead of in feelings. And that's why it's so useful to go look at what you spent last month. Hopefully not in a like judgy or shamey way. Like I'm not saying go be mad at yourself for whatever you spent money on last month, but I am saying that that hard data of what those numbers are can give you a sense of reality instead of just what it feels like is happening for you financially. And it can show you if there's places you want to make changes or not. Ultimately, the budget is yours to do what you want with. Your money is yours to do what you want with. But if you're not happy with how the money is working, or you don't have a sense of clarity about what you're doing with your money, then looking at the hard numbers is the first place to start. My next slides are about like setting goals and figuring out how to save and stuff like that. So I can talk about that, but I want to pause for another minute to see what other questions folks have. So again, I'm trying to make this useful for you all specifically since you're here. Um, just feel like there's so much I want to say, and I'm trying to figure out what's the most useful thing to talk about. Can we do like a quick poll in the chat for people who are here? Would you rather I talk about like saving, debt, more about like how to use the budget, or credit scores, or replacing workplace benefits? Let me type it out. Saving. Okay, replacing benefits, how to use the budget, saving, oh, paying myself, putting that in the budget. Thank you, Jack, for reminding me of that question. Saving, how to use the budget, replacing work benefits. Sweet, wow, people are mostly on the same page. Thank you for being interactive with me. Okay, we did get a couple votes for saving, so I will go over that quickly. Just ask me if you have any questions about what I'm saying. Using the budget, also using it to make the best money. Yeah, absolutely. Okay. I will say before I dive into the slide, when it comes to figuring out how much to pay yourself, I think you need to, like I said, know how much your personal life costs and how much your business costs. And then I think you should come up with a realistic amount of money that you could make. So think about the products or services that you sell and how many you feel able to sell in a month and how much you charge for each. And like, how much does that add up to? And so that would be the amount that flows in as revenue to the business bank account, and then the business expenses get paid. And then you would be able to transfer money from the business to the personal, and then your personal expenses get paid. So we can use the personal budget, like I said, of figuring out how much do I need to make to survive, how much do I need to make to thrive, and that's then the goal of how much to be able to pay yourself. And then if you kind of backtrack that, like, okay, it cost me $2,000 to survive and another $2,000 to thrive. So ideally, I want to pay myself $4,000 in a month. So if I need to be able to pay myself $4,000 a month, how much does the business need to make in order to pay all my business expenses and my taxes, and then pay myself $4,000? So I could add up, if it costs me $500 a month to keep the business running, then that's the $4,000 I need to pay myself plus $500 for business expenses, so $4,500. And then if I'm setting aside 30% of my profit for taxes, and I'm setting aside roughly like $1,300 for taxes. So my goal is for the business to make $5,800. So depending on what I sell, does that seem realistic, or do I need to adjust how much I'm charging or how much my life costs or what? Hopefully the concept makes sense. Let me know if it was confusing. I can explain it again or differently. So that's one framework, is figuring out what you want to make and kind of backtracking it to how much the business needs to make in order for you to pay for the things that you need. Another framework is to think about I had a thought and I immediately lost it. How much to pay yourself? Yeah, I'm sorry, I lost my thought. I'll come back to it if I think of it. Questions here before I dive more into savings? Okay. So when I think about saving, I like to get specific about what I am saving for, or what my client is saving for, right? The act of saving just for saving is not very motivating, but the act of saving for a trip, or saving to buy a house, or saving to have kids is, like, I think, much more motivating for most people. So if you don't know what you want to be saving for, you could think about what are the things that you want to be able to do in the next year. Here are things that I've heard from clients. People have wanted to move to a new rental apartment, have top surgery or some other type of surgery, buy something for yourself. I really need to replace my old college couch that is so old and so falling apart at this point. Maybe you want to buy something for someone else, do a legal name change, take a trip, prepare for emergencies, right? Or car maintenance or other not fun stuff. And once you've thought about the next year, you could also think about medium-term, long-term kind of goals. So long-term could be wanting to retire, meaning wanting to not have to work for money in old age. Medium-term goals could be anything 5 to 30 years from now, depending on how old you are and what feels like medium-term to you. But yeah, could be like a house down payment or a new car or something like that. Once you know what you want, then you can figure out how much it costs, and then you can make a game plan for how much you need to be saving in order to have the money that you want in the timeline that you want. So I'm going to talk briefly about an emergency savings fund, because that's really important to prevent things like medical debt and credit card debt. So you would need an emergency savings fund because stuff is always going to happen. Unexpected expenses are going to come up. And having money in a savings account means that you are more likely to be able to pay for those things and not go into debt for them. How much you should have in emergency savings? I know the whole internet is going to tell you 6 months worth of living expenses. I am much less interested in that rule of thumb and much more interested in what are the risks in your particular life. So if you think through what are the potential financial emergencies that I worry about and how much money would help me get through each of them, I'm not saying we can plan for every possible thing that could happen, right? Like I didn't know COVID was coming, but I could think, well, if my cat needed a tooth pulled, that's probably a couple $100 at my local emergency vet. If I'm in a car accident, I'll need to pay the car insurance deductible, which in my case is $500. If I needed 4 new tires, that would be like 1,500 or whatever, like I can kind of think through those things. If I got sick with COVID and was unable to work for 2 to 4 weeks, how much money would I need to replace lost income over that 2 to 4 week period? When you're thinking this through, I would suggest setting a timer for 20 minutes and walking away to do something pleasant at the end of the 20 minutes. So you're not just like sitting in an anxiety spiral all night. If you don't get through everything you need to in 20 minutes, you can come back to it tomorrow or something. Just ideas. I don't want to just leave anybody in the doom headspace. But once you think through what are the risks that I'm worried about, how much money would be helpful, just choose like the top 2 or 3 most expensive ones and add those together. And then that number would be your goal. So maybe my car insurance deductible of $500 and then in case of medical emergency, $1,000 are my most expensive ones. So I'd want to have $1,500 set aside. And then any 2 emergencies that could happen to me, I would have $1,500 to handle those 2 things. Does that make sense? I recommend keeping your emergency savings fund in a savings account at a bank or credit union. I don't like cash under the mattress because cash can literally burn. I don't like investing emergency savings because the stock market is always going to go up and down. Cryptocurrency is always going to go up and down. And I don't want it to be down on the day that you have your emergency. So if we keep it in a savings account, then we know you have at least that much money available and you can access it very quickly, like within a day in order to pay for whatever your emergency is. This says FDIC insured. That means that the federal government has backed up that even if this bank goes out of business, you will get your money. And all major banks and credit unions have all their savings accounts are FDIC insured up to $250,000. So that's a good place for your emergency savings fund. Last point on this slide is that a lot of times people work so hard and it takes so long to build up that savings in the emergency savings fund that then when the emergency comes up, they don't want to spend the money on it. But that is what it is there for. That is what you saved it up for. And now it is time to spend it. And that's okay. So saving up for goals, whether it's emergency savings or something more fun, start by thinking about how much money you need, and you can get as specific as you want to. If it's a trip to Paris 3 years from now, you can look up what plane tickets cost now, but you don't know for sure what they're going to cost later. But start with whatever information you have, come up with the numbers that make most sense with the information you currently have, and then you can keep getting more specific as time goes on. So once you know how much money you need, you can look at how much money you have that can be used towards this goal, right? Like don't plan for your emergency savings money to pay for your flight to Paris. And then that'll tell you how much more you still need to save. So if I have $100 set aside in my travel fund and I want $3,000 for this trip, then I still need $2,900 to save up over the next 3 years to go to Paris. I'm making this up. Now I want to go to Paris. Pick a timeline, and some goals we can control the timeline over. Like if I'm going to take this imaginary trip to Paris, I get to decide when I'm going to do that. But some timelines we don't have control over. Like if I am going to buy my family presents for Christmas, then Christmas is going to come up regardless of my own timeline. If I'm attending a friend's wedding and I need to be able to travel there and get them a gift and get myself an outfit and whatever, I can't control the timeline. That wedding's going to happen when the people getting married scheduled it to happen. So quick example here, if I want my emergency savings to be $6,000 and I currently have $1,000 that is for emergencies, then I still need $5,000. And so I can figure out what timeline makes sense to me, because this is one that I control the timeline over, at least in terms of how much until I've saved up the full amount, right? Like, I don't know when an emergency is going to happen. So I can think through, does it seem feasible for me to save $1,000 a month for 5 months? Or does it seem more feasible to save $500 a month for 10 months? And I can just kind of play with what seems feasible for me in my monthly budget. How much do I feel able to save? And then if my income varies month to month, I could also say like, well, I know that I need to make at least $2,000 or $2,500 a month in order to survive. But as soon as I make more than that, that means I can throw that in savings. So if I know that working with 4 clients earns me the $2,000, then my goal is to get that 5th client to be able to put some money into my emergency savings this month. And then my goal is like a 6th client to have some money for fun stuff this month. So you can kind of think about it that way, if that's helpful. I don't think anybody voted for debt. Did anybody have more questions about saving before I dive into how to use the budget? Okay, feel free to keep putting your questions in the chat and I will keep talking. So when it comes to actually using the budget, let me back up really quick. When it comes to creating the budget, we talked about writing down what your expenses are and then not determining how much money you need to make, and about how there can be a personal budget separate from a business budget. And you can use that to kind of flow through and determine how much money needs to come in at the top of the business in order to lead to your ability to save personally, your ability to like enjoy your life personally. How that looks can be a spreadsheet or a budget app or Ynab or like literally whatever tool works for your brain. And if you've tried tools that they haven't worked for you, see if you can like think about it or go back and look at it for a little while and figure out what was not working for you. Was it that it was on your computer instead of your phone and therefore you never checked it? Is the problem that the way Ynab, which stands for You Need a Budget, it's a popular budgeting tool, the way that you need a budget kind of plans for the future just doesn't make sense in your brain? Is it that spreadsheets are intimidating because you don't like to use like the formulas in spreadsheets? You know, like think about what about the tool did not work so that you can think about what you want to try instead. Is it that like the budget app had a list of categories that you couldn't edit and those categories didn't make any sense for your particular life? In which case a spreadsheet might be more useful because you can customize that more. But ultimately the budget is the list of where your money is going to go when it comes in, and then like therefore how much you need to be making and what it's going to take for you to do that. So when it comes to using the budget, it means basically watching what your money is doing to make sure it is in alignment with what you said you would do with your money. Again, not in a like me telling you what to do with your money or even the budget telling you what to do with your money. The budget is the tool that you have control over that helps you monitor what's going on and make sure that you're doing what's most important to you instead of getting sidetracked by all the like consumer culture and peer pressure stuff. So I do recommend tracking your income and your expenses continuously. So this could be a daily or weekly basis. Maybe you don't have to do it for like the rest of your life, but it might be useful to do for at least like 3 or 4 months, because that's going to help you settle into habits that are more useful to you and notice which habits are not useful to you as you're trying to stick to that list of your own priorities. Remember, you can modify your budget as much as you need to. It is your tool that you get to control. I do recommend checking in on your budget every time the seasons change. I just find that summer spending is very different than winter spending. And that's a good opportunity to reflect on what you are prioritizing, you know, which category is getting the most amount of money from you, and does that reflect what is important to me? It can also be helpful to create some kind of accountability system with another person. This could look like a budget check-in with your partner on Friday nights. This could look like texting your sister once a month. This could look like talking to your roommate every time you have to catch up on bills for the month. Like finding somebody in your life that you can talk to about money is, I think, really a game changer. You know, like all these systems that are unfair really thrive when we're not talking about them, when we all just feel shamed and isolated. So tools you can try if you have not. There are budget spreadsheets, and there is one on my website if you want. It's a free download in the banner across the top of my website. Ynab, I mentioned, stands for You Need a Budget. And so that's ynab.com. It costs something like $100 a year. It works really well with some people's brains, and it does not work at all for other people's brains. So you could do their free trial if you want. And then, of course, there's like the Mint app and other budgeting apps out there. My problem with apps like Mint is that they're using, the way they work is you link your bank account and your credit cards to the app in your phone so that it'll automatically pull in your transactions. My issue is that they're using artificial intelligence to categorize those transactions for you, and they're often wrong. The artificial intelligence is actually just like not very good yet. So I think the Mint app and similar apps like it can be really useful if you're going in there every day and recategorizing, like correcting what the AI got wrong. But if you're not doing that and you're just looking at like the chart that shows where your money went without fixing what it got wrong first, it could be telling you just incorrect information about your own budgeting habits, your own spending habits. So that's my one thing about apps like that. Is this helpful? What else trips people up when it comes to using the budget or how to use the budget? Thanks for the thumbs up, Ingrid. Always a relief to know that people are hearing me and getting something out of it. Thank you. Danya? Let me know if I'm saying
Yeah, you said it right, Danya.
Great. Thank you, Danya. Cool. Other questions about how to use the budget? I'm going to find my slides about workplace benefits. Okay, I never know how much is too much to realistically assign. How much is too much realistically to assign per category? Like what's a good way to know what's too much or too little? Yeah, it's a good question, Ingrid. A lot of times people will ask me, especially like my clients, when I'm actually working on their budget with them, will ask me like, am I spending too much on this? Or am I spending more than other people do on this? And like, I don't know how useful that framework is, because ultimately this is your life and your priorities. So you get to decide. I would say you know that you're spending too much if you're not able to spend enough or save enough on other things that are important to you. So the budget is really about kind of balancing your priorities. So if you make your list and you're like, okay, rent's getting the most amount of my money, and then savings gets the next highest, and then, and it like kind of reflects your priorities, then cool, you're doing great. If the amount that you're saving per month adds up to being able to afford the things that you want to afford in the timeline that you want to be able to afford them, then you're doing great. But if you realize that you're not going to be able to afford to go to your friend's wedding next year unless you save more, aka spend less or make more, then you know that you want to make that adjustment. If you realize that, going out to eat is you're spending more money on going out to eat than you are on, I don't know, therapy per month, and that's not an accurate reflection of your priorities, then you might want to adjust that. Ashley says, maybe this is an all or nothing mentality, but I think the struggle for me is sometimes if I go over in a category, I want to shut down and say, fuck it. Yeah, I get that. And that's probably not a very useful habit for you. I think sometimes people feel like the budget is like a pass or fail test every month. And like, especially those of us who grew up in the US public school system, like we're all kind of, I'm getting on such a soapbox here, like traumatized by testing and standardized testing. Like the budget is not a pass or fail thing. It's not a good or bad thing. It's not making any judgment call or morality call about you as a person. The budget is the tool that helps you decide what you want to do and gives you the opportunity to change what you want to do if you want to. Yeah, I already went over, I might as well buy something else. I get that. And, like it's just gonna make you less able to do the other things you want to do. So if you notice in your budget that you are consistently going over in like the same category or for the same reason, then you might want to adjust what you're expecting yourself to do and get more realistic about what you're going to do and what habit is what habits you're willing to change and what habits you're not willing to change. You know, like if I have a client who's like, oh, I'm going to stop spending money on like cigarettes and vaping tomorrow, I'm like, probably not. Like, that's really hard to just like immediately never spend money on again. So, you know, you can keep adjusting the budget to be realistic and an accurate reflection of your priorities. But if you are just, I don't know, if you notice yourself in that situation where you're like, oh, I went over in this category this month, so fuck it, let me spend all my money. Maybe just try to think of me and think of this moment where you can be like, no, I'm going to be intentional with my money. And I'm going to remember that I am not doomed because I went over in this category. Life is not over. There is still a future to plan for. There is still next month budget to look at. And you can make more money or spend less money or some combination in order to get yourself back on track if that's the priority to you. Yeah, this is tricky stuff. Thanks for asking. Ashley had a question. If you go over in a category, do you suggest not being able to spend money there for the rest of the month or just try to cut back and do better next month? Yeah, I think it depends on what. Yeah, it depends. For myself personally, like I know that I will occasionally go over on like my shopping category. I kind of use a broad shopping category to mean any purchase of stuff as opposed to like paying for services like therapy. In my shopping category, I tend to overspend. And I know that that comes up more when I feel guilty about something and I want to buy stuff for the people around me because I feel guilty, or when I feel dysphoric. And so I want to buy myself clothes or makeup or whatever to try to feel better. So if I notice that I have spent too much and, you know, today's May 23rd, I have a week left of the month and I've already spent more than what was budgeted for the month. I will try to tell myself like, okay, I'm going to keep a list of the things that I want to buy once I have money to buy it, but I don't have money to buy it until the first of the month because that's when the budget starts over. Whereas something else might be, like if I needed an extra therapy session this month and I had budgeted for 2 therapy sessions this month, but it's time for a third, like, okay, yeah, technically I didn't have that in the budget, but maybe I want to look at, okay, I'm not going to order food for the rest of the month so that I can pay for my third therapy session instead, or I'm not going to save as much as I wanted to this month. And that's a decision that I get to make because I am now prioritizing therapy over saving this month. Is that helpful, Ashley? Yeah. I think all of it is just like making yourself face it and be intentional about it. You know, like there's no rule of thumb that I can give you to tell you what to do or not to do with your money, except that it is helpful to look at it and make a conscious decision about it and, you know, maybe breathe through it a little bit. That also brings up the thing that I think is helpful, especially for my impulse shoppers or my people who are spending money in order to meet an emotional need like I do. If you can keep a running list of the stuff you want to buy and force yourself to keep something on the list for 24 hours before you make the purchase, that can be a game changer for the impulse spending and for the like shopping the sale or whatever. All these companies want to do sales because that's going to make you spend money on their timeline. They're going to make you spend your money when they want you to pay them. And if you can just like take a step out of that and stay on your own timeline and not on that company's timeline, it's going to help you stay in control of your own priorities instead of falling into that like consumer culture trap that is being set up for us. So I find a running list, it could just be like the notes app on my phone, like a running list of stuff that I want to buy. It also helps me remember what is most important to me. Yeah, Jack, absolutely. Unfollow brands on social media. Definitely unsubscribe from the email newsletters, you know, or like send them to spam or whatever. Because yeah, the marketers are really good at what they do. Cool. Other thoughts or questions here before I move into workplace benefits stuff? And Ingrid, was that enough about how much to assign per category? Let me know if you had further questions.
Yeah, thank you. I feel like it really helped me like shape even what you were saying of like they want you to pay on their timeline. And as someone who is so anti-capitalist and resistant of authority figures, like that helped ground me in being like, okay, yeah, I don't have to spend this on their timeline. But yeah, I thank you for recentering again the like, you know, you have your own values, so you pay for what you want. I just also want to be like really also stern with myself and be like, okay, like, yes, these are my values, but also like, do I need this? Right. So
Yeah,
yeah, it was helpful. Thank you.
totally. And if the question is like, do I need this before I buy it, then maybe that running list of stuff you want to buy is also helpful, because then you can compare which of the things on this list is actually the most important to me, and which things are actually not that important. I've been teaching this budgeting workshop, or I've been teaching budgeting workshops for like 3 years, and buying a new couch has been my example from my own real life the whole time. Because while I do need a new couch because this one's terrible, it has never become high enough priority compared to other things in my life for me to actually replace the couch. Awesome. Okay, great. Continue to let me know your questions, but I'm going to pull up my slides about work benefits now. So I'm going to go through a list of what I see to be common workplace benefits for people at like salary office type jobs, so that you have a sense of what that looks like, whether you've worked in that situation or not before. And then I'll talk a little bit about how to get some of these things if you are not in a salary workplace type job or salary office type job. So there's obviously the salary, and all of this is the compensation package, right? Like the actual money that they pay you and all of the benefits they offer you are all a compensation package. That is what they are giving you for your labor. And we're all being exploited under capitalism, but I don't need to go too far into that if we are already on the same page. So common benefits, common compensation is the actual like money that they pay you, paid time off, retirement savings account, that is an investment account specific to retirement. Health insurance obviously is like the big one in this country. Dental and vision insurance, disability insurance, life insurance. Could also be accidental death and dismemberment insurance, such a morbid name. Critical illness insurance, a health spending account or flexible spending account. And an FSA can be a flex spending account, can either be a health flexible spending account, or could be like a commuter flexible spending account, or a dependent care flexible spending account. There's a few types. There could be like commuter or parking or transportation benefits if you're commuting anywhere these days. Sometimes there can be like a connection to attorneys to help with things like estate plans, which are like wills and stuff, or adoption paperwork, stuff like that. Other things like that. So I kind of have those listed in order of like most to least common. So this first slide is the most common stuff. Sometimes they'll just offer health insurance and the salary. Sometimes they'll add in the retirement savings account, sometimes these other insurances. And then like bigger companies or higher profit companies, like tech companies and stuff, will offer some of these other benefits and even more, you know, like sometimes tech companies will offer stock in the company as another piece of the compensation package. So those are just things to be aware of that they exist out in the world. So I'm going to explain what some of these are and how you can get them, but please chime in with your questions so that I can make it useful for y'all. So retirement savings plans, there's a few types. These are, like I said, investment accounts that are specific to retirement. So the most common retirement savings accounts out there are 401ks, 403bs, and IRAs. A 401k is what it's called when you work for a for-profit company and they are letting you use it as a benefit of working there. A 403b is what it's called when you work for a nonprofit company. And then an IRA, that stands for individual retirement account, that's not tied to an employer at all. So anybody can open one, even if they already have a 401k or a 403b at work, or if they don't have, you know, if they're not employed by somebody else at all, they can open an IRA. There's other types out there like SEP IRAs and simple IRAs that are more specific to self-employed people. I'm not going to go too heavy into it today, but let me know if you have questions. All of these retirement accounts can either be Roth or not. So I say traditional because that came first, historically speaking. The traditional way to put money into, let me back up, sorry. The benefit to retirement savings accounts is that they are investment accounts that give you a tax break because the federal government wants us to save for our own retirement, because the federal government doesn't care about old people, or at least not enough. So when you are in retirement, if you have paid into Social Security and you are given access to things in this country like Social Security income, then Social Security could be part of the income that you have when you are no longer working in old age, but the rest of your income is going to have to be from investments, because this country doesn't care about old people. So what the federal government did was they said, here are investment accounts that you can pay us less in income tax if you put money into these investment accounts so that you'll take care of your own selves in retirement. So that's the context. So whether you choose to put money in Roth or in a traditional account is determining when you're getting that income tax break. So the traditional 401k is like historically the first one offered. That said, you can, when your employer pays you your paycheck, some money is going to go into the 401k first, and then income tax will come out of the paycheck. So the money that went into the investment account was not taxed. No taxes came out of that money. So the money goes into the investment account, it grows and grows throughout your career. And then you're 65 or whatever age you retire, and you pull out a year's worth of money to live on for that year, you're going to pay income tax then on the amount that you take out of the account. So you are deferring your income tax until retirement in the traditional model. The Roth is historically more recent, and that is flipping when the income tax happened. In the Roth, you pay your income tax now, today, and get it over with. Then you put your money in the account and it grows and grows. You retire, you take your money out to live on, and you don't have to pay income tax because you had already paid the government their income tax years ago. So that's the main difference between the two. This means that Roth is a little bit more flexible because the federal government has already gotten their income tax from you. So they're not going to force you to withdraw a certain amount in retirement in order to make sure they get their income tax. And there might be an option to get money out of it early if you need to. Again, I'm not trying to get too in the weeds with the time we have today, but let me know if you have questions. Some employers will offer a matching contribution. So they'll say, if you put 3% of each paycheck into your 401k, then I will also match you dollar for dollar that same amount, or I will match half of what you put in and also put money in for you. That's part of the compensation package for your labor, is that they're putting money into retirement for you. But most of the time they will only put money into your retirement account for you if you are also putting money in. Just another subtle way this country likes to keep poor people poor. If you work at a job that offers a 401k or a 403b, and then you leave that job, that money that you put in is still yours. Whether the match is still yours or not depends on the rules of your particular employer. It's called a vesting schedule if you want to look for it. But at least the money that you put in is always yours. It's tied to your Social Security number. So you can either leave the money in that plan until retirement and then go get it, or you can roll it over. It's called a rollover to an IRA. So it's no longer tied to an employer, or to your new employer's 401k or 403b. Generally, I think it's better to roll it out of the old employer's plan because it can just be a hassle to go track down that money later when you don't know who works at HR anymore, and you don't know if they've changed which provider is managing the 401k and stuff like that. So just for organizational purposes, it can be useful to roll it over to either an IRA or your new employer's plan, depending on your new situation. A rollover is free, no taxes, no fees. You can do it as multiple times. It's just moving money from one retirement account to another retirement account. And then technically you can always cash out a retirement account early, but you will owe any taxes that have not been paid yet. Plus there's usually a 10% penalty for taking your money out early, because the federal government, again, is trying to incentivize us to pay for ourselves in old age instead of cashing out the money early. There's other nuances here too, like technically you can get money out early if it's to purchase a home for the first time and stuff like that, but I'm not going to get into that right now. Just know that there are fine print things out there that you can learn more about if you need to. Yeah, I'm gonna try, some of these are not, I think, the most pressing thing, but stop me and ask me if any of this you want to hear more about. When it comes to health insurance, if you're in a job and they offer you multiple health insurance plans, you can think through this, but especially if you're self-employed and you need to get health insurance through the marketplace, there's so many plans out there to choose from. In order to choose a plan, you can kind of think through how much it's likely to cost you in total for healthcare for a year on this plan versus that plan. So when you're comparing different health insurance plans, you can think about what are your likely needs in this upcoming year? What are your usual healthcare needs in a year? Go to a primary care doctor once, you need any specialists, you need any prescriptions, you need mental health care. But then also, is there anything specifically coming up this year? Surgery, pregnancy, stuff that you might plan for. Then you can think through, or you can look at, okay, these are the plans available to me. So I would have to pay this much per month as the premium to just have this health insurance. Then I might need to pay up to this deductible throughout the year. Then there are these co-pays for my usual things that I go to. So you can kind of add up how much total you might pay in healthcare on this plan versus that plan versus that plan. And that can help you decide which plan is for you. You can also think through a possible worst case scenario by just looking at what the out-of-pocket maximum is for each health insurance plan. And that's assuming that you have providers in network for the plan. So most health insurance plans are going to have an out-of-pocket maximum in network and maybe a separate one out of network, or maybe there's no maximum for the out of network. So that's where it gets messed up in this country. But the out-of-pocket maximum is hypothetically the most that you would have to pay out of pocket on top of the actual premium of having the health insurance in total for a year. Once you've paid that much for all of your deductible and copays and stuff in a year, then the health insurance company is supposed to pay the rest after that. So in my personal situation, I know that thyroid cancer runs in my family. So if I had a worst case scenario of like cancer that needed surgery and radiation and stuff, then I might hit my out-of-pocket maximum that year. So I can look at, well, this health insurance plan is more expensive per month, but it has a lower out-of-pocket maximum just in case of that worst case scenario. So maybe that's worth it to me. You get to decide. So let's talk about some other things you might need to consider when you're self-employed. I talked about separating your business bank account from your personal bank account. I'm sorry, give me 1 second. Let me I feel like I had some other slides in here that I wanted to talk about. Okay, it is coming up next. Great, false alarm. Okay. So I already talked about all of these, talked about having separate business and personal bank account and budget. Talked about setting aside income tax as part of your business expenses, 20 to 30% of your profit. But then you might also need to replace some of these benefits, right? The retirement savings account, health, dental, and vision insurance, disability insurance, life insurance, and also paid time off. You know, I was sick on Friday and I'm still a little sick, honestly, but I didn't work on Friday, so I didn't really get paid on Friday. So that is something to think through for yourself. So when it comes to a retirement savings account, and again, this is an investment account specifically to save for retirement, you can get your own at any major investment provider. So you could look at the more old school places like Fidelity, Schwab, Vanguard, the other big names like that. You could also look at the newer robo-advisors like Betterment, Wealthfront, and Ellevest. Robo-advisor means that they're having artificial intelligence make your investment selections for you. So kind of the trade-off here is that at the more old school places, you have more control personally over what you're investing in. So that's more of a responsibility to manage it yourself and keep an eye on it and do the research and make decisions. But it's more possible to avoid investing in like oil and gas, versus the robo-advisor means that you don't really have to do any research on what to invest in. They're going to make the decisions for you based on the information that you give to the algorithm. But it's going to be harder to avoid specific like oil and gas, or like if there's any specific things that you want to avoid investing in. I do think this is a totally fair compromise for anybody who's just getting started and doesn't know what to do. I would rather see you invest small and have artificial intelligence make decisions for you than not invest at all. When it comes to getting health, dental, and vision insurance, you can first see if you might qualify for Medicaid in your state. In Pennsylvania, it's if you make less than like $17,000 a year or something like that, and that would be your business profit. So if what you expect to make from the business minus your business expenses and taxes is less than 17,000 this year, and you don't have any other sources of income, you're probably eligible for Medicaid. And so you should go get that free health insurance. And if you don't qualify, then you can look at getting it through the marketplace. Here in Pennsylvania, we go through the Penny website to get health insurance. And the Penny website will help you compare the total costs of different health insurances, like I just explained. And it'll also tell you if there's, I forget exactly what it's called, but it's like, if you don't make enough money to pay full price for the health insurance, you pay less for the health insurance. My brain's not working, I'm sorry, but there's something in there that if you make between certain levels of money per year, you don't have to pay for full cost for the health insurance. So it's worth looking at, especially if you don't have health insurance. Disability insurance and life insurance, I will just very briefly explain what they are. Disability insurance is a private insurance policy that is meant to replace part of your income if you are unable to work due to a covered disability or illness. So most of us know that getting like the federal government benefit of Social Security disability is a whole pain and is terrible. The system sucks because this country doesn't care about disabled people. So this is private disability insurance that is meant to, again, replace your income. It's not meant to pay for your healthcare. It's not meant to pay for anything specific for you the way that health insurance does. This is meant to replace some of your income if you're unable to work because of a covered illness or disability. So like somebody who works at Google probably has disability insurance that would replace 100% of their income for up to a year if they were sick. But that's because Google is a cool place to work is what I was going to say. But I don't know, Google's a terrible company, but you get my point. They are going to pay more because they want the top talent in the world and whatever, and they are made of money. A lot of the rest of us don't have access to disability insurance. It is something that you technically can buy yourself, but it can be on the expensive side, especially for women, because pregnancy risk means higher risk of disability. The gendering of it is weird, but here we are. So that's just a very brief explainer on disability insurance. Let me know if you have questions. Life insurance, on the other hand, is again, private insurance that pays out a lump sum of money if you were to pass away in a covered way, in a covered time. So a lot of salary jobs will say like, okay, as part of your compensation for working here, you are also being given life insurance that is 1 times your salary. So basically they're saying if you pass away while you are working at that company, the life insurance company will pay out 1 year's worth of salary to your beneficiary, whoever you have listed as your beneficiary. It could be anybody. And then there's that money left behind. See a question. Do you know anything about still being able to go through the marketplace if you are in an installment plan for taxes? I believe I didn't qualify because I still owe taxes, but I could have missed something. I'm sorry, unfortunately, I don't know much about that. That's something that I would have to look into more. I mean, if you don't have health insurance, it's probably worth at least looking at Penny or whatever it is in your state to see if you could qualify for anything. But I don't know what it looks like if you still owe taxes, like income taxes. Yeah, sorry, I don't have more help for that. But I appreciate the questions. Keep them coming. So disability insurance, life insurance are common benefits. You would probably want these, let me back up. You probably want disability insurance if you have nowhere else to turn, if you are unable to work. But again, it might be expensive. So you could take a look you could get a quote for how much it would cost. The website Policy Genius will give you like a range of a quote. They're just going to want your contact information to do that. So just be warned, they're going to call and email you. You could look at it if there's no one else that could help support you if you are unable to work for your living. Life insurance, on the other hand, is really more about if there's anybody else dependent on your ability to earn an income or your ability to do labor. So I'm thinking about like stay-at-home parents and caregivers, as well as people who work for money and people who do both, right? So if there's anybody that would need money if you are not around to be providing money or labor, then you might want to have life insurance to give them a lump of money to replace whatever's going on in their situation to help them out if you're not there. That was very quick explainer. But if you need those things not through work, like I said, you can look at Policy Genius for a quote and even make a purchase through there. The reason I like Policy Genius is that they are comparing all the major insurance providers so that you can see which one's going to be the best deal for you. But you could also talk to an insurance broker who, again, is going to compare different companies for you. And going through an insurance broker means that you'll have a specific person to talk to instead of like the Policy Genius customer support team or whatever. So that's a place you can look for those things. When it comes to paid time off, you kind of just have to like decide how you're going to handle it. If you're going to be taking off small amounts of time, like my sick day on Friday, then it might just be about working a little bit harder the week before or the week after in order to make up how much money you need to make that month. But when it comes to taking off a week or two for vacation, that would be a savings goal. I want to save up enough money to replace my income for a week or two, or at least cover my bills and expenses for that time. And once I have that saved up, then I can take the vacation. Is that helpful? What questions do people have? Scrolling back through the comments to see what else I missed. Ashley asked, do brokers usually make commission? Yes, because that's how they would get paid. So they're going to get paid by the insurance company that you ultimately buy a policy through. So they could be biased as to who to go with. I would suggest before making a purchase with a broker, like you can interview them, ask them how they get paid, ask them how they remain neutral and unbiased, ask them if they've ever chosen, if they've ever made a recommendation that was more suited to the client versus their own paycheck, whatever. And like, trust your gut about whether they're being honest with you. And I would give that advice to talking to any financial professional. Ask them how they get paid and make sure you know how they get paid so that you know whose interest they have in mind. I know a bunch of you said that you wanted the content about replacing workplace benefits and stuff. Was that enough information? Do people have more specific questions? Again, I am here to be useful. Are there independent brokers like you? The official word. You might be thinking of the word fiduciary. So I, as a financial planner, I am a fiduciary. Yeah, So I've taken the fiduciary oath, and that oath basically says that I will do and say what is best for my client's situation before my own financial situation. So part of how I am upholding that oath is by not taking money from anybody except my clients directly. So I am not, like, I don't sell insurance at all, because the way that professionals sell insurance is to get paid by the insurance companies. So I just don't do that. I help my clients navigate which insurance product is right for them to purchase separate of me. They don't buy it through me. So when it comes to insurance brokers, I don't know if any of them are fiduciaries, and I don't know how I would feel if one of them called themselves a fiduciary, because ultimately they are getting paid. I guess if they were committing to the legal standard of only recommending what is ideal for the client, not at all based on how much money they make, that could be, it could be. Yeah, I think actually, if you're going to talk to an insurance broker, just like really interview them and make sure that they feel like the right fit for you, to help you. And you can also do a little of your own research through Policy Genius and stuff on the side to make sure that whatever the broker is recommending to you makes sense in the broad context of what's out there. Yeah. I do think insurance brokers are useful. You know, the ones that are like good people are going to help you think about like, oh, well, this insurance company is less shitty to fat people than this other company, or like this company is less shitty to trans people than this other company. So like they are useful, like as a professional, depending on your situation. So definitely, if you're worried about things that would make it hard to get life insurance or disability insurance, or to get a good price, things like pre-existing conditions and marginalized identities, then you might want to find an insurance broker who has experience with those things, and they'll be able to help you. I did specifically say insurance broker who will compare multiple companies for you. What you do want to avoid is an insurance agent who just works for one particular insurance company, because then they're only going to want to recommend you products from their company. They're not going to tell you what else is out there. Okay. Well, you can chat me other questions if you have them, but I'm going to share just a couple more slides with y'all once I get Zoom working. And thanks for bearing with me through all the doing my tech by myself today, y'all. I appreciate it. So if you liked learning from me today and you want to know how to learn more from me, I do have a group coaching program called Take Control of Your Money, because that is what it is designed to help you do. If you have more than just survival money, if you understand that taking control of your money is necessary to build the life that you want, if you are willing to invest both time and money into your own ability to manage your money for the rest of your life, then you can schedule a free consultation with me in order to find out if this is the right program for you. We'll talk about your current financial situation and your goals, and I will tell you what you should be focusing on first, and if it's time for you to work with a professional or not, and if this program is the right one for you or not. Like I said, I am a fiduciary, so I am going to ultimately tell you what's best for you, not what's best for me. And I am here to be useful to people. So let me know. I will drop the link, but it is talkwithriver.com if you want to schedule that free consultation with me to see if this is right for you. Before I let you all go, I do want to ask you to commit to one action step that you're going to take within the next week, and just type it in the chat. And, you know, the chat will disappear when we hang up the Zoom, but at least you will have written it down, and that makes you more likely to follow through on it. And it can be more than one, but at least one. So is it looking at your expenses? Is it looking into health insurance or life insurance? Is it looking into an IRA? Do you need help choosing an action step? Ashley's going to get a separate business account. Love that. That's awesome. And it's so helpful to keep yourself organized. Going to actually make a budget. Love that. Do you know what tool you're going to try out first, Danya? You're going to try a spreadsheet or an app or something? Jack's going to get a different business account. Love that. And for those who are opening another bank account, I like nerdwallet.com for recommendations about banks and stuff. NerdWallet does like third-party reviews of banks and credit card companies and stuff. So that can be a helpful place to start when you decide, to help you decide where to open that account. Donnie's going to start with a spreadsheet, but might try Ynab. Awesome. Ingrid's going to create my values goals list and then export that monthly statement, yikes, and print it the old school way and annotate it, and then get rid of some subscriptions. That's great, Ingrid. I love that you've got a plan. That's great. Awesome. Okay. Well, thanks for being here, everybody, and thanks for your questions and participating. This is really fun for me. You can follow me on Instagram also if you want. It's rivernice.financialplanner. And I will see you all around the internet. Have a good night.
Thank you.